Good morning, Derek Graham, Portal Asset Management. I'm here today with Greg Galton, our CIO, to give you an update on the performance of the Portal Digital Fund and the Radiance Multi-Strategy Fund. Good morning to you, Greg.
Good morning, Derek.
So, Greg, what was particularly unusual about the month of August was that volatility continued to be low. Now, volatility is not something, low volatility rather, is not something that you would normally align with Bitcoin. But maybe talk us through what's been happening, why you think the volatility is low, and where that means we're likely to head next.
Yeah, exactly. There's a couple of schools of thought on that one. I'll tell you which camp we're in at the end. What we have seen is a really turbulent macro backdrop. Bitcoin hit an all-time new high of 124,000 mid-month, but then just sold off during the month, and the volatility just fell in a heap. That's been happening now for a couple of months. The argument is that as Bitcoin becomes more institutionally focused, more institutional holders, the volatility will decline over time. Now, I partly agree with that, but also I think you have to understand that Bitcoin's a very unique asset in that it has very strong upside volatility. So people typically associate volatility with downside movements.
Yes.
Because that's typically, the bulls take the stairs and the bears take the elevators or the lifts, depending on whether you're American or Australian. So volatility typically is associated with downside volatility. Bitcoin has an amazing potential to exhibit upside volatility. And I think what we're seeing is, if you look back on history, at periods where volatility is being subdued, and there are a number of periods we can point to. And in fact, if you want to have a look at my email that we sent last week, that'll highlight those periods in time, you tended to see periods of low volatility followed by explosive price action. Now, we think we're in a similar situation at this point in time. Expectations are into the fourth quarter of this year that we will see, we're hopefully going to see a rate cut from the Fed Reserve if it hasn't occurred already. But the start of that rate reduction cycle, the end of QT, potential start of QE, all of these macroeconomic factors potentially driving liquidity and driving the Bitcoin price higher towards the end of the year. So we are expecting that explosive price action. So we think that this lower volatility period we're in is really just the sort of the spring winding up, ready to sort of explode upwards. So that's what we certainly think we're seeing. We haven't seen a significantly long period of low volatility yet. We may well do in the future as Bitcoin continues to mature and grow as an asset. And certainly as it gets bigger and bigger, the volatility will be subdued. But for the next period of months and indeed, I think years, it will still be up around that 35 to 65% range, which is exactly what we've experienced in the past 3 years and is exactly consistent with our strategy that enables us to earn the 5 to 7% per month in additional Bitcoin by exploiting that volatility, that risk premium in the marketplace.
And the volatility on Bitcoin's price versus the volatility on the options market is different, isn't it?
Yes, you have seen as I said, a maturing of Bitcoin as an asset class. So the realized volatility, which is the actual volatility that we've seen, and that's a rearward-looking volatility number, that's been reducing over the past 12 to 15 years. Yes. But the implied volatility, and that's the volatility that the options market price is in,
yes,
that still is in that range that is attractive to us to be able to write premium income against. So we don't expect that to change significantly going forward. So that's still what creates the opportunity for us.
So what did all that mean when it came to, I guess, firstly, the Radiance Multi-Strategy Fund and its return and its trading for the month? And then secondly, Portal Digital Fund.
Okay, so let's look at Radiance first. An interesting month. Bitcoin actually closed down 6.5% for the month of August. And just remember that August is historically the worst month of the year for Bitcoin, pretty much year in, year out. So Bitcoin was down 6.5% and Radiance was down about 11.6%. That's a little bit more than we were expecting. As you know, we talk about the 1 to 1.5 beta to the downside on the Bitcoin price. This is about 1.8. The reason for that is because of the lower IV and the price action during the month, we weren't able to take advantage every day of writing that premium income. Unfortunately, we're only able to write an additional 1.8% of additional Bitcoin during the month. So that lower income meant that we didn't quite have the offset on the to the downside movement in the Bitcoin price, or else we would have been expecting that 1 to 1.5% movements. Slightly outside of that, nowhere near outside of the extremes of what the models would suggest going forward. You're likely to see month-to-month movements, but we certainly expect that we are very much on track for the 5 to 7% per month on average. Over that sort of 5-year period that we're talking about, and still very much in line with that increase of 7x over the next 5 years.
Very good. And the Portal Digital Fund. Remember those investors in Singapore now investing in the Portal Digital Fund Share Class A and the Portal Digital Fund Share Class B. And we've just been referring to Radiance before, which the Singaporean investors invest via Share Class B, and it can be invested in directly in Radiance also. But Share Class A, the original multi-strategy fund of funds, what's been happening with that this month, and how are we progressing with our strategy to see that pivot?
Yes, so the CCI 30, which is the broad index of cryptocurrency, that was up about 3.8% for the month. Unfortunately, the Portal Digital Fund was down about 1%. That's because Bitcoin underperformed the altcoins for the first time in a long time. We saw potentially the start of altcoin season. Although I would temper those expectations a little bit. That upside was driven by Ethereum. Ethereum, as you know, had a very good month last month, had a very good month this month, and a number of one-off sort of tokens, Solana, which there's rumors of an ETF coming. Chainlink, also potentially another ETF. We're starting to see some of these top 10 protocols, the market speculating about an ETF coming for them. And that's creating a mini altcoin season, but it's not widespread. It's very, very limited to these top 10 coins. So Bitcoin was up double digits. So was Solana, so was Chainlink, but the market broadly was only up 3.8. Obviously, Portal Digital Fund does have exposure to Radiance. It has about a 15% exposure there. And as we said, Radiance was down 11.6. So that did drag the returns down slightly, but we certainly expect that those tailwinds for Bitcoin mean that it is going to continue to perform well into the end of the year and into 2026. And that we should get some very good returns from that investment. Now, in terms of the pivot that we're doing, as you know, we're looking to pivot to the systematic, non-directional, uncorrelated alpha, and that process is ongoing. But we do still have some exposure to some of the higher volatility sectors. And if when there is an alt season, and we certainly are expecting one by the end of the year, those funds we think will do very, very well into the end of the year, and then that's where we'll start to make a decision on those, whether to shift out of those and to really sort of protect to capture that upside, to take profits, as you will, and really look to deploy into those other funds that we're looking at the moment that, as I said, have that intelligent outperformance potential for them.
So Radiance's goal is to achieve some 70 to 100% per annum, or 7x return over 5 years. These are goals. This is our strategy. This is what we intend to do. We consistently look at other high-performing, systematic, non-directional funds. There aren't a lot of them that had these sort of performances, but there are some of them. And that's what we continue to review when we're doing our analysis. So the Portal Digital Fund is deployed already to Radiance and to one other, not dissimilar in the fact that it's a non-directional, systematic trading fund and has pretty solid returns. And so I think we'll see this continued narrative occurring, and we are doing this in a steady process, really looking towards maximizing the returns of the existing funds we've got in.
Yeah.
I think it's important to note the difference between what was an alt season that we've experienced quite a few times before over the years, now that we've been in it for, well, coming on to 8 years, 2 seasons at least, then this is quite different to what's really speculation about real world trading environments getting hold of or getting to reflect the value of these assets such as Bitcoin, which we already have through the ETF, and Ethereum, Solana, others that are sort of in that top 10. I'd hardly call that an altcoin season. It really is peculiar, isn't it, Greg? It's basically just speculation as to entering a new marketplace.
Yeah, indeed. I think there's been a lot of tokens launched in the past 3 years, 3 to 4 years, let's call it, by venture capitals, by VCs, who have perhaps forced those protocols to issue a token well before they achieve proper product market fit. And in many cases, you don't need the token to actually use the protocol. So there's been a rapid increase in the number of tokens every altcoin season. From a few hundred to a few thousand to now several 100,000. So the amount of capital that requires to get an altcoin season rally is significantly magnitudes of order higher than we've seen in previous cycles. I think personally, we think as a fund manager or as an advisor that's going to be spread much more thinly this time around, and the ETFs are certainly playing a role in that. Where people that are making profits in their Bitcoin and ETH ETFs are unlikely to go and play a meme coin, but they may well shift those profits into the next ETF that comes up, whether it's Solana, whether it's Chainlink, whether it's even our favorite XRP, and whether they do shift into that. But I think you're going to see a much more muted altcoin season because of that.
Yes, and as you're right, extremely difficult to lift. I mean, if you include the meme coin, millions of tokens in a capitalization growth as it was, 4 years ago when there were just maybe really 500 or 1,000 that were vaguely considered. Really, still only, we all know, still only 100 or so. So what might be seeing is extraordinary opportunities within altcoins where the venture capitalists have taken considerable risk and they've had a win. But the win's going to be a real win. It'll be a win with a token that's going to truly perform in a Web 3.0 environment versus a speculation of the entire all ships rise on a rising tide. That's our general thoughts on it, and it makes total sense that we're starting to see that speculation occur just in people's anticipation that the ETF run might have a similar run to a Bitcoin. So as you said, Ethereum saw double-digit growth this month. A lot of it speculated on that. It's been flat for a long period of time. Maybe we'll just wind up with the area of these layer one protocols, because I know it's an area we've discussed often before. The VCs have invested a great deal of money in layer one protocols, and we're probably seeing a few of the more solid ones come to a head. I think it'd be interesting for people to get a view on what our view is on layer one protocols too.
Yeah, that's an interesting one. I think that the view on Ethereum's changed a lot in the last little while. The narrative has changed. The narrative used to be that the layer twos were eating Ethereum's lunch, so they were taking away all the gas fees and putting it on the layer two. And in that regard, Base, which is the layer two developed by Coinbase, has been a very, very successful protocol for Coinbase and very profitable for them. But what you've seen recently is because the lack of volume on the Ethereum network, the gas fees, the GUI, has been extremely low. So it's actually been very efficient to be doing DeFi on Ethereum again. I think Ethereum is still viewed as the institutional grade smart contract layer one. Absolutely, hands down. It's been around the longest. It's sustained the most sort of period of time, and it's had the most volumes go through it. All of the other layer ones really are successors, are trying to compete with it. And we still think that the layer ones will be a race to the bottom. No one has fixed that, found the solution to the blockchain trilemma, and that ultimately it will be the cheapest, fastest, most secure, most decentralized layer one that will prevail. And that layer one might not currently exist. I know there are the likes of Google and other entities have tried to, or are looking to create their own layer ones. And so that's going to provide quite an interesting challenge over the next few years, trying to pick who's going to come out on top. It's a very difficult game to play. And we're still very, very early in the piece. So they do look expensive on classic tech valuations, well above tech valuations. price to revenue multiples are well over 100. But obviously, we wait to see who ultimately wins out. At the moment, the market's betting on Ethereum with Solana and Sui and those layer ones as sort of fast followers. But let's see how that ultimately plays out. And it may be that Ethereum, is not the one. As I said, there may be a blockchain that doesn't currently exist, may be the one that wins out above all.
Very good. And finally, we're heading to October. Why is it called October?
I guess just historically, because August and September have been fairly weak markets, that sort of northern hemisphere summer, the sell in May and go away, and so tends to be weaker during that period. August, as I said, is always weak. So October, November, December tends to be very solid months and a quarter for Bitcoin and for cryptocurrencies generally. So everyone's looking forward to the last quarter of the year. And this year, it's timed with the Fed likely cutting rate at least potentially 2 or 3 times. So that will provide a very strong liquidity boost to the Bitcoin and the whole market, the whole cryptocurrency market.
Very good. Thanks very much, Greg. And like normal, people are more than welcome to reach out to us, Greg at portal.am or Derek, DERYCK at portal.am, and ask us questions along the way, either about the strategies that we advise or about the market. We're delighted to comment. I look forward to seeing you next month, Greg.
Thank you. Will do. Cheers.